Good morning. Good morning. I'd like to begin by acknowledging that we find ourselves on the traditional lands of the Imitachwan First Nation in the Treaty 9 territory. Please take a moment to recognize the importance of the lands that we each call home. As an organization, we do this to improve our relationships with nations and improve our own understanding of local Indigenous peoples and their cultures. June is National Indigenous History Month in Canada, a time to recognize the rich history, heritage, resilience, and diversity of First Nations, Inuit, and Métis. And I encourage all of you as you take trips this summer to take the time and learn of the history of the regions that you are visiting. My name is Carmen. I'm the Manager of Business Services with the Timmins Chamber. Welcome to another session of our Reimagined Resiliency series, partly supported by Newmont Porcupine. Our session today, an introduction to the work sharing program, is hosted within our workforce pillar, and it's proudly supported by Far Northeast Training Board. So thank you to our friends at Far Northeast for helping bring these sessions that are very important to all of our members to you. Our members and small businesses have joined us via our 32 Northern Ontario Chambers of Commerce, from Temiskaming Shores to Kenora. So thank you all for joining us. I'll welcome Karen Luce, Work Sharing Program Operations, and Catharine Smith, Employment Insurance. They'll be leading you through today's discussions. If you do have any questions, please unmute yourself or key your questions in the comments. And with that, I will hand it over to both Karen and Catharine. Welcome.
Good morning, and thank you very much for the kind introduction. We have one other member who is she's our presenter within that. She will be doing the showing the presentation for us. And Caitlin, can you screen share? Thank you. I appreciate that. So good morning, and thank you for inviting us to be here. My name is Karen Luce. I'm a Senior Program Advisor with the Work Sharing Program Operation Team. And I will acknowledge the fact that I'm actually located on the unceded territories of the K'ekwitlan people, as I am in British Columbia. So I am in a different area than you are. And so as is in the introduction, I am with the Work Sharing Program Operations Team. I will be co-presenting with my colleague, Catharine Smith, who's with Employment Insurance. And I will allow her to introduce herself later in the presentation. So on behalf of Service Canada, I'd like to thank you for allowing us to be here today. And I would like to thank you all for your interest in the work sharing program. Today's presentation will focus on the work sharing program in general. If you have any specific questions about the program, they will be introduced in, my goodness, I can't get my tongue around this. They'll be addressed individually. The program is co-managed by Service Canada Program Delivery and Employment Insurance. So today we'll provide you with an overview of the work sharing program. Then we will allow sufficient time for general questions about the program. And as previously stated, if you have questions, please feel free to post them in the chat, and we will work on looking at those. Specific case questions about active work sharing agreements cannot be answered today, but we will share a channel that can be used to send further questions you may have about the program. And so, as previously stated, the work sharing program is managed by two distinct branches within Employment and Social Development Canada. Service Canada Program Delivery Branch, which I represent, assesses and supports the application process and sets up and manages agreements with employers and employee representatives. And then Employment Insurance assesses each employee's eligibility and manages their EI work sharing benefit claims. So if we could move, let's see, if we can move to the next slide, please. Thank you. The program allows employers to retain qualified employees who temporarily reduce their hours of work and allows employees to keep their jobs while their employer recovers. Work sharing is a tri-party agreement between the employer, the employees, and the Government of Canada. The work sharing program allows employers to keep their staff at reduced hours and allows eligible employees to get paid work sharing employment insurance benefits for the hours not worked due to work sharing. The program allows employers to retain their experienced and qualified staff by averting layoffs, thus avoiding having to recruit and train new staff once the employer has recovered. It also means that employees keep their jobs and maintain their work skills. In some cases, employers may not have been able to avoid layoffs prior to applying for work sharing. Core employees who were laid off prior to the start of a work sharing agreement may be recalled to work and included in the work sharing unit. The work sharing program does not require an employer to recall all employees in layoff status. So if we could move to the next, thank you. So for a work sharing agreement, employers group employees by similar job description to form a work sharing unit that will reduce their work hours by the same percentage. The percentage of utilization must average between 10 and 60% over the course of the agreement. Sorry, I'm having a little technical difficulty here. And a work sharing agreement can last between 6 and 26 weeks, and there is a possibility to apply for extension to obtain 12 additional weeks. When applying for work sharing, employers group employees by their job description or employees that perform similar work. Smaller employers could have a group of employees with different job duties that affect one another grouped in one work sharing unit, as long as they clearly demonstrate that it will avert a temporary layoff. Employers can form more than one work sharing unit per agreement, and we see this for larger employers. Equal sharing of available work. It is important to note that throughout the duration of a work sharing agreement, employees agree to reduce their hours of work and share the work available equitably. Employees who do not agree to be part of a work sharing agreement and that perform the same duties as others in the work share unit must reduce their hours of work by the same percentage. This also applies for employees not eligible for employment insurance. The reduction of hours must be the same percentage for all employees within the same work sharing unit. The work reduction, meaning the reduction of work, must average between 10% and 60% throughout the duration of the agreement. And the length and extent and any extension to agreement. An initial work sharing agreement duration, as previously stated, can be between 6 and 26 weeks. Employers who need time beyond 26 weeks can apply for a 12-week extension at least 10 business days before the end of a 26-week agreement. This will allow time for Service Canada to assess and extend the initial agreement and for employment insurance to extend the work sharing project period for employees, so there is no interruption. The maximum duration of a work sharing agreement is 38 weeks. After an agreement, the employer must serve a mandatory cooling off period equal to the duration of the prior agreement before reapplying to the program. And so we're now at the eligible employers screen. To be eligible, an employer must be a private business or a publicly held company that has been in business for at least 2 years, operating year-round, and have at least 2 employees. The business must have experienced a minimum of a 10% reduction in business activity due to circumstances outside the employer's control. Ineligible employers include those experiencing a labor dispute, who are seasonal, or have increased their workforce, or are a government administration. The only way Service Canada can confirm an employer's eligibility is after we receive an application and assess the application, as there may be factors that need to be analyzed. So the next slide should be employee eligibility, and we've got that slide. Okay, so to look at employee eligibility, eligible employees are the core employees, those employees who work year-round, are permanent, and are required to perform the day-to-day functions of the business. To be able to collect work-sharing employment insurance benefits for hours not worked, they must be eligible for employment insurance, and that will be determined after employee applies for work-sharing employment insurance benefits. Members of a work-sharing unit who do not qualify for employment insurance benefits or choose, for personal reasons, not to accept them, are still required to reduce their hours of work on an equivalent basis. Seasonal employees who actively work year-round could be eligible. For example, if an employee works for the same employer, does landscaping in the summer, and then in winter clears snow, they may be eligible. Some self-employed individuals, such as owner-operators and those responsible for the direction of the company holding a 40% of voting shares or are investors, are not eligible for the work-sharing program. So the next slide should focus on the application process, and it will actually be over the next 2 slides. So an employer experiencing an unexpected drop in business activity outside their control is encouraged to go to our website to find details regarding eligibility, how to submit an application, obligations, etc. of the program. A completed work-sharing application must be submitted at least 10 business days prior to the proposed start date of the agreement. And all agreements must begin on a Sunday and end on a Saturday. An employer must experience an unexpected reduction in business activity of at least 10% in the last 6 months. An employer should visit the work-sharing program website to verify if their business meets the program's eligibility criteria. The employer would then invite their employees to do the same. Once eligibility has been reviewed and both parties have agreed to submit a work-sharing application, the employer completes the necessary application forms that are available on our website. That is the application and the attachment A. The application forms must be, as said previously, submitted at least 10 business days before the proposed start date, and that would be complete applications. Any missing information can delay the start date of a proposed agreement. So if we could just move to the next slide, please. The fully completed form is to be sent by email to the Regional Work Sharing Program Delivery Service Canada office. Information on the application package, if it happens to be missing or is deemed to be incomplete, could delay the start date of the agreement. That means a postponement. Provided we can get the information and assess within the 10 days, we work towards that 10 days. When Service Canada Program Delivery receives the work sharing application package, all employees listed on the attachment A, and the attachment A is the work sharing unit, are assumed to be eligible for work sharing employment insurance benefits. After signing of the work sharing agreement, employment insurance will assess each individual's entitlement to work sharing employment insurance benefits when they file their individual claims. Agreement start dates are not retroactive. All agreements start on a Sunday, as previously stated, and end on a Saturday to align with the EI benefit payment cycle. Service Canada will conduct a full assessment of the application, and if approved, the work sharing agreement will be established and signed by the employer or their representative, the employee or union representative, and Service Canada. Thank you for your attention, and just taking a look here, I will now invite my colleague, Catharine Smith from Employment Insurance, to explain the EI process and useful information to know. And the floor is yours, Catharine.
Okay. Hi, I'm Catharine. I'm a senior program advisor on the EI operational policy side of work sharing. It's my turn to come in now and discuss the EI side of the work sharing program that comes into play after the work sharing agreement is in place. So once that work sharing agreement is in place, participating employees can apply for EI work sharing benefits. And these next slides that I'm going to show you will focus on the payment of work sharing benefits through the EI program. So I'm going to focus on 4 subjects, which is 1, the record of employment, 2, the requirement for your employees to apply for work sharing benefits. 3, the employer utilization reports, and 4, the calculation of the work sharing benefits by EI. So let's begin with the record of employment. So as required for any EI claim, the employee is going to need a record of employment, which we also call a ROE or an ROE. The ROE must be provided to each employee who will be participating in the program in order for EI, employment insurance, to be able to calculate a claim. So on this slide, you can see some of the information we provide work sharing employers regarding the unique requirements for work sharing records of employment. For instance, box 16, which is the reason for issuing the record, would be reason for separation H, or work sharing. Makes sense. Box 11, the last day for which paid. This is a little more tricky because for a work sharing record of employment, your employees will be working, so they will be being paid. They're just being paid under an agreement. So instead, this box indicates the last day worked before the start date of the work sharing agreement, the point at which you're reducing everybody's hours by 10%. So also the record must be issued as soon as possible after that employee's last day of work prior to the start date of the agreement and those starts of shifts that are reduced. As with all records of employment for employees under normal situations, just like them, the work sharing employees, the preferred method of submitting a record is electronically via the ROE web program or through your payroll service provider. There's much more information about records of employment and how to complete them on the canada.ca website, and it's in the Employment Insurance Information for Employers page. So if you can give me the next slide, that'd be great. Excellent. So work sharing benefits. Employees participating in the work sharing program will be provided with a reference code to use when submitting their work sharing claim. Employees must file a claim for employment insurance benefits indicating that it is a work sharing claim. That's one of the options for application they can choose. And they have to use this reference code provided by us when submitting this application. That allows them to access the work sharing application. So this reference code, along with the record of employment that you'll be issuing, will make sure that the system automatically establishes the claim for benefits on the date that the agreement begins and start paying them from that point. Another feature of the work sharing benefits is the ability for employees to be exempted from filing weekly claimants reports. If they meet certain criteria, they will, the claimants reports will be filled out for them automatically on their behalf, and they don't have to do it every week, which is normally required of those who are claiming EI benefits. Another important point, the benefit rate and benefit period calculations for work sharing claims are made in the same manner as for any other type of EI benefits. So as a general rule, we in EI pay a basic rate of 55% of the employee's average weekly earnings. And this rate goes up to a maximum, and that maximum for 2023, right now it's $650 a week. And that's based on a maximum insurable earnings of $61,500 that was set for 2023. So it's important to note that each employee can have a different benefit rate depending on their own individual earnings. And because of privacy, you as the employer will not know the individual benefit rates or any other claim information for each individual employee. Another interesting factor of EI work sharing claims is that the 1 week waiting period is deferred for work sharing weeks, meaning benefits are payable from that first week of agreement without having to wait. Additionally, each week of work sharing extends the benefit period by 1 week. So for example, an EI benefit period normally lasts 52 weeks. And if an employee works 8 weeks under your agreement, your work sharing agreement, their benefit period is therefore extended from the normal 52 to up to a 60-week agreement, or a benefit period, sorry. This allows employees to avoid exhausting their EI claim while collecting these work sharing benefits and can help them in the event that they're laid off later on down the line. All weeks of eligibility for regular or special benefits remains intact, intact, and those work sharing benefit weeks that they're being paid do not count towards that total, do not reduce them. So if we can go to the next slide, I'll talk about the utilization report. So employers who enter into a work sharing agreement must complete a utilization report, or UR, which I'll probably be saying because saying utilization report a lot of times is very hard. So URs, employers have to complete a UR every week for the whole duration of the agreement. It is through this UR, utilization report, that you employers transmit the information EI is necessary for EI to calculate the work sharing benefits payable. This UR is an Excel spreadsheet, and it contains a list of all the employees who are participating in work sharing with you. For each employee, the UR indicates the normal weekly hours, the hours worked by the employee in that week, the hours missed by the employee because of work sharing, any hours missed for any other reason, sickness, etc., any amounts other than wages paid to the employee, so paid sick leave, that kind of thing, and the reason for separation if someone happens to leave your employment during the work sharing period. So as I said, we as Service Canada are dependent on the information contained in that UR to pay your employees benefits. So it's important that all that data you provide us in these reports is exact and that they are sent consistently and on time. What on time means is employers must submit their URs each week via a secured channel, which is called the data gateway. So like for ROEs, there's this web portal that is there for employers to be used to be able to submit the URs electronically. And when you sign up for a work sharing agreement, all the details on how to register for this, how to use the data gateway and everything are provided. And a guide explaining how to complete the utilization reports is also available on the canada.ca website. So it's worth noting that processing the URs is automated on our side, meaning that employees who have requested to be exempted from filing their weekly claimants report usually can receive their benefits within a very short period of time, just following the receipt of that utilization report by Service Canada. Okay, so now let's see how work sharing benefits are calculated. In order to calculate the work sharing benefits payable to a client, there's three numbers we use. You can see them there. The employee's benefit rate, which, as I said a few slides ago, this is calculated with the information on the record of employment that you're going to create for the employees. We also use the normal weekly hours, which is the hours that an employee would usually work, meaning like usually worked before the agreement reduced any of their shifts or earnings. And the third thing we use is the number of hours reported as missed because of the work sharing agreement. So the formula is basically, as you can see there, benefits paid by EI equals the benefit rate times the hours missed divided by the normal weekly hours. And you can also see in there an example where we illustrate two ways that we calculate the benefits payable, just depending on how your brain works. So for someone who has, say, a benefit rate of $500, you can see there, and they have normally worked for 40 hours of normal weekly hours. And in that particular week, they worked 24 hours of work sharing and missed 16 hours because of the agreement. So the benefit rate's 500 times 16 divided by the 40, and they would then get from EI $200 of work sharing benefits. The other way to look at that is they have 16 hours missed. You divide that by the normal weekly hours, and that'll get 40 hours, 40% of their normal hours is what they missed. So you times that by a benefit rate of $500, and you still get that same $200 of benefits paid by EI. So either way you slice it, you can see it ends up with a $200 for the EI when you have a benefit rate of $500 in this example. So one last important note from my side is for work sharing benefits to be paid, the employee has to work at least 30 minutes, 0.5 hours in work sharing in that week. Absolute essential. If that doesn't happen, it's not counted as a work sharing week. So there you go. This brings me to the end of my presentation on the EI side of work sharing, and I can hand it back to you, Karen.
Thank you, Catherine. Okay, so finally, there are resources available to employers to answer your questions. And you will see they are outlined on this slide. So the first point, we direct you to look at the website as we outline information on the website. If you would like, you can also contact the Employer Contact Center, and their contact information and hours of service are listed here. And if you are unable to find the answer to your questions on either of those two, we actually have an email inquiry unit for employers who wish to obtain general information about the program. And that is also available on our website on the Contact Us page, but is presented here on this particular slide. So we hope that this presentation has been useful to you, and we're now open to questions if there are questions that you would like to ask us.
So you can either unmute if you did have a question, or you can add it in the chat and we can do that for you. We'll maybe give a couple of seconds to see if there are any. Catherine and Karen, you were able to cover all of the details, and I think that last slide is probably just a great resource for everyone to be able to reach out and ask. So just from Trista, no questions, but thanks for sharing the information. Be helpful to their organization. So thank you both. Okay, well, with that, Catherine and Karen will share the slide deck with us. So if you registered and participated today, you'll get the recording as well as the slide deck so that you can go back and take a look at those. Thank you, Karen and Catherine, for spending some time with us this morning to go over this opportunity for businesses and organizations. Thank you to Far Northeast Training Board and Newmont Porcupine for supporting our Reimagine Resiliency series so that we can bring this type of session to businesses across the North. And I'll send out the recording this afternoon, and enjoy the rest of your day, everyone. Thanks so much.
Thank you for having us.
Thanks.